In last night's earnings release, Google knocked it out of the park, but they also announced a 20-for-1 stock split, the first one since 2014. Hi, it's Doc's Market Minute for Wednesday, the 2nd of February. How are we going to play that stock split going forward? Here's a daily chart of Google, and you can see how yesterday's earnings report created this huge gap, and you've got people chasing after Google as we speak today. So it's not just the earnings, it's also the fact that this $3,000 stock, when we divide that by 20, is going to become a $150 stock. So those that are on record as owning Google on July 1st, for every one share that they have at 3,000, they will receive 20 shares at whatever the price is. So let's say it's still $3,000 a share. So that means that they'll receive 20 shares at $150 a share value, which is the same thing. The trouble is we don't know what the price is going to be as of July 1st. The price could be higher, the price could be lower. A lot of this depends on how much demand is to get into this stock, which has been a very high price stock for a long period of time. And most of the Robinhood investors are just not able to make any kind of trades on this stock due to their account size. So if the price comes down to somewhere in the $150 range, obviously this becomes a lot more palatable and tradable for a smaller investor. Now, Google rarely splits. The last time it split was 2014. So let's use another example of a high demand stock such as Apple, and let's look at what happened to the price during its last share split, which is in 2020. Here's a daily chart of Apple that goes all the way back to the pandemic low. And since that point, obviously, it's been in a pretty serious uptrend in accumulation. So here was the last earnings report and announcement of a 4-for-1 stock split. And this happened back in late July of 2020. And the actual split happened about a month later on the 28th of August. And so what you can see is that the market did chase after that stock at the old price, and then there was a 4-for-1 split here at this point. So anyone that was on record as owning Apple stock got 4 times as much at the reduced price. So let's zoom in a little bit more on this area, because I think that's where the opportunity is to play these type of stock splits. Now, again, I have to emphasize that not every split is going to operate in the same manner, but it's a pretty rough analog that does seem to follow a lot, especially amongst a highly desirable stock. Okay, so here's the earnings again. Here's the earnings release, and here's the announcement of the 4-for-1 split. And then you can see this down here, this little event, that's the 4-for-1 split. So before the split and even slightly after the split, people continued to pile into Apple. But then what I want to show you here is what happens shortly after the actual split itself, is you get into what I'll call the hangover. And this occurs shortly after the split. And you can see the price in this point came down from about maybe a high of 137 all the way down to 105. So that's a pretty significant pullback that occurred. And this happened around the same time as the general market was pulling back as well too. So that somewhat inflamed the pullback. So this is the way I'm going to trade Google. I'm not going to chase after this like the rest of the retail crowd here, trying to get in on Google just so that I can be a stock of record as of July 1st. That's a long way out. So I'm going to let the retail crowd push it up to whatever price that it wants to be. And even after the split, which occurs on, from what I understand, July 15th, we may see people chasing after this, because let's say it holds value at $3,000, goes down to $150. All of a sudden, the whole Robinhood population is going to be open to chasing after Google stock at that point. So it may have some additional residual gains after the split. What I'm looking for is the period right after that. I want to look for the hangover and I want to look for that pullback. And at that level, I'm going to be very aggressively selling puts down at a level that would represent value to a buyer. We won't know what that's going to be until we get to and past the split in July. But rarely do we see a stock split without the hangover on the backside. And that is what I'm going to wait for, because to me, that represents a huge opportunity to be able to get into Google for what I believe to be a value price. Even if I don't get assigned, it's still going to be worth the trade. That's it for today's Market Minute. Thanks for listening, and we'll see you in the next one.